Hello everyone. Figma, a design software company, is preparing for an IPO later this year. Now, a lot of people are interested in this company as it's a hyper-growth company with incredible margins operating in a hot field. In addition, a lot of people have missed out on Circle Internet Group, which had an IPO price set at $31 a share. It actually opened at about $80, and today it's more than $200. You can see on the screen, whoever bought at IPO at inflated price in June still had good gains. This has led to fear of missing out in some investors. Now, in this video, I will talk about my views on what price I'm interested in buying Figma stock. Please note that this is not financial advice. I'm not qualified to give financial advice. I'm simply recording my thoughts about Figma. Please consider liking this video, sharing it, and subscribing to the channel. Let us now look at the details. Figma is a competitor to Adobe, and Adobe wanted to buy Figma for $20 billion based on the revenue of $400 million, giving it an astounding and a mind-blowing price to sales ratio of 50. But now, the initial public offering price is expected to be between $25 to $28 per share, which would value them at $16 billion on fully diluted basis, which is much lower than what Adobe has offered, considering Figma almost doubled their revenue since then. Now, Figma is expected to open at a much higher price as there is huge demand. So what price is prohibitive and what price is to tolerate if I want to purchase this IPO? For that, I need to look at their financials. With respect to revenue, Figma generated $821 million in revenue over the past year and is expected to exceed $1 billion this year. The company reported 46% year-on-year increase in the first quarter in revenue, with higher customer retention rates of 131% and strong gross margins of 85% plus. As you can see on the screen, the company has 963 customers spending over $100,000 in annual recurring revenue and maintains a sales efficiency ratio of 1.0, meaning for every dollar spent on sales and marketing, Figma generates $1 of new gross profit the following year. Now, these metrics are astounding, and a lot of people would be prepared to buy a price to sales of over 40, in which case the company would be valued at $40 billion on the basis of $1 billion expected revenue. So also, this converts to a stock price of well over $60. Now, this is my guess, but it may open higher or lower, so we shall see. Now, what price would I personally enter? And for that, I need to do a valuation. As you can see on the screen, I show two valuations, one with the reasonable assumptions case and the other one with the great execution case. So for 2025, Figma is expected to make $1 billion in revenue. Recently, Figma grew its revenue over 45% and has dollar retention rate of over 130%. However, I am considering 25% growth in the reasonable assumptions case. Please note that as the company grows bigger, it is harder for them to grow. So the latter would be harder, and the same logic applies here. With this, I see $3.1 billion in revenue for Figma by 2030. That is more than triple its current revenue based on gross margin of 85% plus. I see 35% net margins, with which I see $1.1 billion net income for Figma. I assign a multiple of 40. Now, of course, you can assign something higher, so please feel free to do your own valuation if you think they deserve a higher multiple. With this, Figma will be at $43 billion market cap by 2030. For a fully diluted valuation, including unvested stock options and all other outstanding equity, Figma anticipates having approximately 585 million shares outstanding. Since they are in growth mode, I see them giving stock-based compensation and also diluting shareholders. So I assume 3% dilution year after year, with which they will have 678 million shares by 2030. When I divide the $43 billion of market cap with 678 million shares, I get a stock price of $63 by 2030. Now, for me to double my money, I have to buy the stock at $31. I am fairly certain it will open at a way higher price than $31. So if I am considering the reasonable assumptions case, I would stay away from Figma IPO. Now, for the great execution case, I estimated 30% growth for the next 5 years, 35% margin, 60 multiple, and same dilution. This will result in $115 stock price by 2030. For me to double my money, I have to buy the stock at $57 or below. Now, the IPO may let me buy the stock at this price. So if I am considering the great execution case, I may get the chance to participate in the IPO. Now, since the market is irrational and we are dealing with hype, Figma can do what Circle did, open at $70 and skyrocket to $200 in a week or two. But I personally won't play the game with my hard-earned money. So what I prefer staying on the sidelines if it opens above $57. Now, if it opens below $57, I would think and buy some. And if it opens if the stock price gets close to $31, I will buy even more. Let me know your thoughts in the comments, and thank you so much for watching.